Welcome to CMC's look at the week ahead. We have a slew of economic data coming out this week. However, we're going to start with equities because today we've already had Barclays and Deutsche Bank release figures. Both are adding to a very gloomy sector at the moment. Barclays down 5% and Deutsche Bank also down 5%. Barclays had made an announcement that they intend to do a rights issue, and Deutsche Bank have almost halved their net profit. Looking ahead to the week, we have Lloyd's on Thursday. Second quarter results are being released. Not a lot expected there. Of potentially more interest is RBS, obviously owned by us, the tax-paying public. We're expecting them to come in with almost double profits from last year. And more importantly, we may hopefully find out who the new chief executive will be, replacing Stephen Hester, who was obviously in the media a great deal recently. I will continue with equities as we have British gas owner Centrica releasing their half-year figures. Now, we expect these to come in reasonably well due to the bitterly cold spring that we had. Although the key to this will be on news from their previous announcement about a cost-saving initiative they've got. So shareholders will be looking far more at the longer-term plan that the company has rather than the short-term announcement from tomorrow. Moving on to the US, across the pond we have 130 constituents of the S&P 500 reporting this week. So far, we've had 259 companies report, of which 56 have beaten analyst expectations on Reuters. Obviously, the bulls in the market will be hoping that these 130 companies follow a similar suit, and we have another positive week for general earnings figures from the US. Wednesday is the start of the week as far as the economic calendar goes. The baton is given first to Europe. We have both German and Euro employment data coming out. Both are expected to come in line with expectations, so we don't expect it to be a major catalyst for any sort of movement. As soon as that is done, the focus moves straight back over to the US, where most of the big decisions are being made. The Federal Reserve's policy arm are coming to the end of a two-day meeting. Now, we don't expect there to be any major changes to their policy, but more importantly, we're hoping to get a little more clarity on what could trigger a reduction in the government's massive stimulus program that has been running so far this year. Now, a tapering of the stimulus is expected. We all know it's going to come. It's when it comes that it becomes more important. We are still in a very, very fragile economy, and a lot of the analysts take the view that this needs to be done at a very, very opportune moment. I will talk about it later, but we've obviously got the jobless claims figures on Friday, which will kind of give more of an idea of what the US should do going forward. Thursday, we move back to Europe, where we have PMI data, followed by the interest rate decisions from both the Euro and the UK. We had a raft of positive economic indicators last week in Europe, so we're hoping for more of the same this week. It's at the moment expected that Italy, France, Germany, UK and Europe all will have better than previous figures for the PMI. Straight after that, obviously, we move on to the interest rate decisions. Much like the US, we're not expecting any major change from either the Bank of England or the ECB. However, we do have Mr. Carney speaking. We don't actually expect much from him tomorrow, or this week, in fact. We already have a date in the diary, 7th of August, where he's indicated that there's a good chance that he's going to make some statement regarding his commitment to keeping interest rates low for, should we say, the foreseeable future. Unlikely to get a date, but it should give us a really good idea and a basis by which this market can again move. Draghi, on the other hand, he's already stated these intentions. He said previously that he would do whatever it takes to keep the economy going. He said he'll keep the interest rates at record lows, and if needed, if things do get worse, he's more than happy to cut them further. We've discussed all the data that's coming out through Europe, through UK and the US earlier in the week. It all, however, comes down to one moment, and that is Friday, and that is obviously the jobless claims. Now, we had an extremely strong figure come in last month. We also had revisions upwards on both the previous two figures that came out. Essentially, this data is a key indicator of what the Federal Reserve's future policies are going to be. We've already heard that officials say that rates will remain at these historic low levels until this rate gets down to 6.5% from the 7.6% it was previously. I don't want to say that that means that everything that happens between now and Friday isn't going to matter, but so many of the decisions that are coming out earlier in the week kind of have their basis to what comes out on Friday. So again, we may see a stagnation of the market, small spikes at the figures. Essentially, we're all building up to that moment. Lunchtime on Friday, make sure that you are not at lunch and you're at your computer trading. Thank you very much for joining me, Nick Dowlace, for this weekly review of the week going ahead. Also, just to mention that we have a webinar for those jobless claims on Friday. The link for that will be in the description of this video at the bottom. We'll also on Friday be releasing our view of what's happened so far in the week, so make sure to join us for that as well.